Everybody's trickling in. So we'll have Christa Volpicelli, who is the chairperson of our conference today, start the event. We're delighted to be partnering with Citi for one more year, and we thank them for their support and contribution, as well as the other sponsors. Christa, the floor is yours. Thank you.
Thank you, Nicholas, to you and to all of your team. On behalf of all of my colleagues at Citi who are here today, we're very proud to continue our partnership with you generally, but also at this conference. I think this is our third year now doing this together. There's an active schedule of one-on-one investor meetings that will be happening in parallel with this conference that our team is arranging. So we think that the combination of that forum with all of the presentations here today will be a great venue to explore ideas. When I kicked off this conference last year, I would say I was not feeling particularly optimistic at that time about the outlook for the sector. I was here on crutches. I just broken my leg. But besides that, 2016 had seen a dramatic drop in equity capital raised across the sector in the US, with a bit over $1 billion raised. This was nearly double in 2015. Pressures existed in valuations across virtually all of the sectors, although we had seen last year some recovery in spots like the MLPs and in the LNG sector. Fast forward to today, and I look back at the last 12 months in 2017, and it really didn't turn out to be that different of a story for the US markets. In aggregate, we raised a bit over $1 billion of capital again. Again, this was an unusually low year in terms of shipping activities in the capital markets. There were other markets that were stronger. We saw a lot of activity in the Norwegian bond markets and some of the equity OTC markets as issuers attempted to take advantage of that capital for certain situations. And we saw some areas of recovery, most notably in the dry bulk segment, where investors have embraced that sector again with a bit more enthusiasm. But for shipping, where do we stand today? Equity values across most sectors still remain 20 to 50% below where they were several years ago. Questions are looming on the horizon in terms of how companies are going to be adapting to new environmental regulations and what that means for their cash flow and for their cost basis. Many of the listed companies remain below a size threshold to provide proper trading liquidity for investors. And this issue only becomes a bigger issue as investment funds are getting larger over time. Year to date, dry bulk is up, but nearly every other sector, tankers, LPG, the LNG corporates, and MLPs are down maybe 5 to 10%. All of that said, I can stand here today and tell you that I feel more optimistic for the next 12 months than I did last year at this time. We are in interesting times globally, and there will be some presentations that I'm sure will address this, but the world is seeing growth across all major markets of the world: Asia, Europe, the US. Oil prices have recovered from the bottom and are in the low to mid 60s. Markets are at all-time highs. In shipping, investors and analysts continue to spend time analyzing the fundamentals of supply and demand, and when you look across most segments and where the order book is today, you would say that the outlook does look quite favorable. But most importantly, we at Citi still believe that the long-term trend within this sector is greater use of the capital markets, but also for companies to increasingly become more of scale. And I'm encouraged by the work that we are doing privately with many of our clients that M&A is absolutely high on the agenda. So we have a packed agenda today covering nearly every segment of shipping, as well as all of the key financing markets. I thank you for all taking the time to be here and participating both in the panels as well as the investor discussions, and I wish everyone a day of productive meetings ahead.